Welcome to the deep dive. Today we're looking at a really interesting company just hit the markets recently, Jain Resource Recycling Ltd, or J2REC. You've pulled together a stack of their latest filings.
That's right, Jain and REC. They're a big player in non-ferrous metal recycling here in India, lead, copper, aluminium. And the timing's perfect. They had their IPO literally just this month, October 2025.
And boom, straight away they dropped their Q2 and H1 results for this financial year, FY26.
Exactly. So, yeah, lots to unpack.
So our mission today really is to get into these numbers, see what's driving the performance they showed just before the IPO, and also look at their strategy. Now they've got that fresh capital.
Yeah, figure out where they're headed. They're making some interesting moves, shifting focus a bit.
Right. And maybe start with that slightly awkward detail that popped up almost immediately after they filed.
Yeah, you mean the correction notice. You can't miss that.
Not really.
Yeah.
October 22nd, just a day after finalizing results, they had to tell the exchanges, whoops, made a mistake.
Yeah, a transpose error, they called it. In their historical numbers, mind you, for the year ended March 2025.
What exactly did they swap?
The segment figures for aluminium and copper, just switch them.
Oh, wow. Okay, not ideal for a newly listed company, even if it was historical data. Makes you raise an eyebrow about processes, doesn't it?
It does. They were quick to say it was unintentional and not deliberate, and stressed the current H1 FY26 numbers were correct. But yeah, a bit of a messy start.
Okay, noted. Let's put that aside for now and dig into the main course. Section 1, those H1 FY26 results, the 6 months ending September 30th, 2025.
Yeah.
This is the performance leading right up to the IPO. How did they look?
Pretty strong, actually. Really strong. Consolidated revenue from operations was ours, 3,663 crores.
3,663. And how does that compare?
That's up 27% compared to the first half of last year, H1 FY25. Solid top-line growth.
Okay, 27% growth is definitely eye-catching, especially pre-IPO. But was it profitable growth? Or just pushing volume?
Looks like profitable growth. Their EBITDA, that's earnings before interest, taxes, depreciation, and amortization, hit ours 250.1 crores.
And the growth there.
Even better, up 37% year-on-year, so profits grew faster than revenue.
Which means margins improved.
Exactly. The EBITDA margin went up by 52 basis points, landed at 6.8%.
Okay, hold on. For listeners, maybe less familiar, 52 basis points. What does that really mean in simple terms? Why is that good?
Right, good question. A basis point is just 1/100th of a percent. So 52 basis points, that's about 0.5%. It means for every 100 rupees of sales, they kept an extra 0.5 rupee as operating profit compared to last year.
Okay. So it shows they're getting more efficient as they grow. Better cost control, maybe.
Precisely. It suggests the growth isn't just coming at any cost. They're managing the business well operationally. Better scale, better efficiency.
Got it. And the bottom line, profit after tax, PAT.
Followed the trend. R is 155.1 crores, up 38% year-on-year. So yeah, a really strong financial performance leading into that IPO.
Which happened right after this period ended, October 1st, listing on NSE and BSE. How big was the IPO itself?
Pretty substantial. R is 1,250 crores total size. And importantly, R's 500 crores of that was a fresh issue of shares, so new money coming into the company.
500 crores new capital. And what's the plan for that cash?
Primarily, they said, for prepayment or scheduled repayment of existing borrowings. And, you know, the usual general corporate purposes.
Makes sense. Use the IPO cash to clean up the balance sheet, pay down debt.
Yeah, it's a classic move. Deleverage right after listing, gives them more flexibility later, frees up cash flow that would have gone to interest payments. Smart.
Okay, and alongside the financials and IPO, there were some management changes flagged. Board meeting on October 21st.
Yes, two key things. First, they appointed Mr. Sanchit Jain as an additional director in an executive role.
Sanchit Jain? Any relation?
Yes, they disclosed he's the son of the chairman and managing director, Kamlesh Jain.
Okay. Keep it in the family. Common enough, but always something governance folks watch closely right after an IPO. Signal succession planning, maybe?
Could be. Or just bringing in trusted family talent into an executive position.
Yeah.
Second thing, they approved setting up a new subsidiary.
Right, the name was interesting. Jain CY Circular Solutions, or Jain CY Recycling.
Yeah, that CY seems deliberate, maybe circular year or circular yield. It feels like they're trying to brand their newer, maybe higher tech circular economy stuff separately.
Interesting branding.
Yeah.
Okay, let's move into section 2 then. How did the different parts of the business perform in that first task? Where did the growth actually come from?
Right, the segment breakdown, it was really driven by two segments, lead and copper.
Okay.
Lead alloy ingots was the biggest chunk, 48% of the total revenue. That came in at Rs 1,740 crores.
And the growth in lead?
Massive. 46.8% year-on-year growth in revenue for the lead segment. Almost 50%.
Wow, okay. And profits followed?
Yep, segmental EBITDA for lead was up 45.2%. So really strong performance there.
And copper?
Copper ingots was the second biggest, 46% of revenue, about Rs 1,700 crores. Revenue growth there was 13.9%. Segment EBITDA up 13.0%. Solid, but, not the explosive growth we saw in lead.
Okay, so lead and copper together make up, what, 94% of the revenue? What about the last bit, aluminum?
Aluminum. This is where it gets a bit weird. It's small, only 4% of total revenue, about 155 crores.
Yeah.
But the revenue growth was staggering, 115.0% year-on-year. They more than double aluminum revenue in the half year.
Doubled revenue. That sounds amazing. Why do you say it's weird?
Because despite that massive jump in sales, the segmental EBITDA for aluminum actually fell by 22.5%.
Fell, so they sold twice as much but made less profit from it.
Exactly. Revenue way up, profits down significantly. It's like they were chasing volume at the expense of margin in that segment.
Any idea why? Is it strategic or just bad business in that segment?
Hard to say for sure from the outside. Could be strategic, maybe grabbing market share with low ball pricing, or maybe they were clearing out some old high-cost inventory and took a hit.
Or maybe processing costs for certain types of aluminum scrap just spiked.
That's possible too. Whatever the reason, it suggests aluminum wasn't the main focus for profitability in H1. And that kind of ties into other moves they were making, sort of cleaning house.
Right, the discontinuations. They decided to exit some businesses around this time too.
Exactly. Strategic streamlining. First big one was their UAE subsidiary, Junaicon Global Ventures. They shut down the precious metals refining operation there back in April 2025.
Precious metals, gold, silver, why get out of that? It sounds lucrative.
Their reasoning was pretty clear. Low margins, high overheads, and too much price volatility. Basically, more trouble than it was worth. So that whole subsidiary is now classified as held for disposal. Off the books, essentially.
Okay, simplifying the structure. Anything else?
Yep. They also cut ties with an associate company, Sun Minerals Menar Private Limited, sold their 28.88% stake, and got back a loan they'd given them.
So shedding non-core assets, focusing the business, makes sense leading into and just after an IPO. They want a clean story.
Absolutely. Focus on the core non-ferrous recycling and, crucially, on the future growth plans.
Okay, perfect transition to Section 3, the future. What's the big strategic push now they have the IPO money and a cleaner structure?
The headline story is definitely forward integration in copper. This is a major strategic shift for them.
Forward integration. Explain that. What does it mean for a recycler like Jain Rec?
Okay, so right now they take copper scrap, recycle it, and sell copper ingots. That's a fairly basic commodity-grade product.
Right.
Forward integration means they're taking those ingots themselves and processing them further into higher-value products, specifically copper cathodes, copper wire rod, and copper bus bars.
So moving up the food chain.
Yeah.
Using their own recycled output to make more sophisticated stuff.
Exactly. They're using electrolytic refining to make these high-purity copper products that are essential for things like, EVs, electrical grids, electronics. It's moving from just recycling to becoming a manufacturer of advanced industrial materials.
It sounds like a much higher margin business, potentially.
Yeah.
Who's handling this project?
It's being done through their wholly owned subsidiary, Jain Green Technologies PVT Ltd. Seems like that's their vehicle for these newer value-added initiatives.
And for how long is this?
It's moving fast. As of September 2025, they'd already bought the land about 6.6 acres in the SIPCOT industrial estate. And construction was apparently already 70% complete.
70%? Wow. So when does this new capacity actually come online?
They're targeting commissioning in Q1 of FY27, so that's what? April, May, June of 2026? Not that far away.
And the scale?
Phase I is planned for 9,000 metric tons per annum MTPA of copper cathodes and the related products.
9,000 tons. That's significant. What's the investment?
Total cost for Phase I is pegged at Rs 95 crores.
Okay, 95 fours. And they're funding this how? Using the IPO proceeds?
Interestingly, no. They stated this is being funded entirely from internal accruals.
All from internal cash flow, despite raising 500 crores in the IPO.
Yep. They'd already spent 45 crores out of the 95 by September. It shows how much cash the existing recycling business is throwing off. They used the IPO money to fix the balance sheet, And they're using operating cash to fund this major growth project. Pretty strong financial management.
Very strong. Okay, so copper forward integration is the big immediate project.
Hmm.
Are they looking at other new areas too? Diversification.
Yes, they're actively exploring 3 new recycling domains. Seems like they're looking at the next wave of recycling needs.
Which are?
Automotive tires is one, e-waste is another, trying to recover plastics, metals, maybe even rare earths from discarded electronics. That's a huge potential market.
Yeah, e-waste regulations are only going to get tighter. And the third?
Solar panels, recovering aluminum, glass, silver, silicon. Again, thinking ahead to when current solar installations start reaching end of life.
So tires, e-waste, solar panels, all areas likely to see more regulation and focus on recycling.
Smart positioning, definitely. And they also mentioned plans for strategic acquisitions of scrapyards within India and maybe a JV for another new recycling plant.
So securing domestic raw material supply too. Less reliance on imports.
Seems like part of the plan. Control the input side more directly.
Okay, let's shift to Section 4. What gives them an edge competitively, and how do they frame their ESG environmental, social, governance credentials? Their global reach seems key.
Absolutely. That sourcing network is a massive advantage. Pulling scrap from over 120 countries, that's complex, but gives them access and diversity of supply. And getting 69% direct from scrapyards helps control quality and maybe cost.
And they sell globally too, right? Exports are a big part of the mix.
Yeah, 63% of their H1 revenue came from exports, selling into more than 20 countries. So they're deeply integrated into the global metals trade.
But that means huge exposure to volatile global commodity prices, right?
Yeah.
How do they manage that risk? Copper, lead, prices swing wildly.
This is probably their most sophisticated advantage, especially compared to smaller local players. They use hedging, specifically through the London Metal Exchange, the LME.
LME hedging, why is that important?
Well, Jain is one of only 2 recyclers in India whose lead ingots are actually registered on the LME.
Okay, and what does that registration let them do?
It allows them to use financial instruments like futures contracts to lock in prices for their materials, often looking out 90 days or so. So instead of just being hit by whatever the price is on the day they buy scrap or sell ingots, they can smooth out those peaks and valleys.
So it makes their margins more predictable, less volatile.
Exactly. It provides significant protection against commodity price risk. It helps explain how they could maintain and even improve that EBITDA margin we talked about earlier, even with fluctuating input costs. It's a major stabilizer for the business.
Makes a lot of sense. Okay, finally, the ESG angle. Recycling itself is obviously green, but what specific points do they highlight?
The energy savings are huge, and they emphasize that. Recycling copper uses up to 85% less energy than making it from virgin ore. For aluminium, it's even more dramatic, up to 95% energy savings.
95%. That's incredible. The environmental benefit is undeniable.
Absolutely. And think about the scale. Recycling thousands of tons saves an enormous amount of energy and carbon emissions compared to primary production.
Are there regulatory pushes helping them too?
Yes, definitely. The government's mandates are starting to bite, like requiring minimum recycled content. They mentioned 5% for new non-ferrous products. That basically creates built-in demand for recycled materials from companies like Jain Resource.
So strong environmental credentials backed by regulatory tailwinds. What about the F in ESG, the social side?
They seem quite active, particularly in Tamil Nadu, where they have major operations. They mentioned transforming government schools 15 done, aiming for 21.
That's substantial community investment.
Yeah, and sponsoring Pink Auto's auto rickshaws, driven by underprivileged women, giving them livelihood opportunities, and supporting IAS aspirants from disadvantaged backgrounds with coaching.
So quite localized, community-focused initiatives. Builds goodwill, I imagine.
For sure. It shows they're embedded in the local fabric, not just extracting resources. It builds social license to operate.
Okay, so let's try and synthesize all this. We have a company, Jain Resource, that came to market on the back of really strong H1 results.
Yep, profitable growth, improving margins.
They immediately used the IPO buzz to clean house, got rid of the volatile precious metals business, shed an associate company,
Streamlining, focusing the narrative.
and they've clearly signaled their main strategic direction, using internal cash flow to fund a major push up the value chain with the copper cathode project.
That's the big one, moving from basic recycling to higher value manufacturing. Plus, they're seeding future growth by exploring tires, e-waste, and solar panel recycling.
All underpinned by sophisticated LME hedging to manage commodity risk and a strong ESG story, both environmental and social.
It paints a picture of a company that's, quite deliberately pivoting from being primarily a commodity recycler to becoming a more integrated industrial player focused on higher value green materials.
Right. Which leads us nicely to the final provocative thought for you, the listener. That new 9,000 tons per year copper cathode plant is coming online soon, Q1 FY27.
Just a few quarters away now.
Given that these green copper cathodes likely carry much better margins and feed directly into the whole electrification and green energy boom, how quickly could this single project start to fundamentally change Jainrec's overall revenue and profit mix?
Yeah, how fast does it shift the center of gravity away from the traditional lead and copper ingots? Could it redefine the company's profile even by the end of the next financial year?
Something to think about. That forward integration could be a real game changer for their valuation and market perception very quickly.
Absolutely. That potential transformation is the story to watch.
Okay, fascinating stuff. Thanks for walking us through Jainrec's recent filings and future plans.
My pleasure.
And thank you for joining us on the deep dive. We'll catch you next time.